Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. I have an article from Kitco talking about why silver prices can benefit from both sides of this virus. And this is going to show silver's true potential compared to other circumstances, especially looking forward in the future. If we want to see what investments have potential to rise, we have to look at where they're headed. And this shows an extremely beneficial future for silver, as it's needed for so many things from its industrial and monetary value. I also have another article talking about why silver has never been a better deal than it is today, just sharing more potential on that side of things. So if you do enjoy this video, make sure to smash the like button. Let's see if this video can get 200 likes. Everyone go like the video right now. It's kind of hard for me to talk right now. I just had mouth surgery yesterday, so if I pronounce things kind of weird, that is why, but it's not going to stop me from making videos for you guys. So anyways, like the video for that as well. It's extremely hard to talk right now. But anyways, silver could benefit from optimism about increased industrial demand as economies reopen the following virus pandemic. At the same time, the metal also draws investment demand for those worried about a second wave of the virus. It does stand to benefit at this point from both of those expectations, he said in an interview with Kitco News. There is still a lot of uncertainty about how things are going to shake out. That's helping silver at this point. And the optimism, the uncertainty is definitely helping silver, because the longer this goes on, especially if there's a second wave of the virus, it's only going to complicate things even more. So in the short term, Savant continued, the metal could undergo a profit-taking correction after prices rose to a 3-month high, but the consultancy is bullish on silver in the medium to long term, he said. And that's what I keep hearing time and time again. The short term for silver isn't too bullish, but the medium to long term is where the extreme potential is. In the 3 to 6 month term, we're going to see mid $20 silver. In the 3 to 5 year term, we could see $100+ silver. So COMEX July silver last week traded at a high of $18.16 an ounce, which was its most muscular level since February 27th. The metal was above $18 early Monday before backing off its highs. Still, as of 10:42 a.m., July silver was around 2.7 cents higher for the day's $17.72 an ounce during a session in which June gold was down $23. So for silver, we're seeing a jump in optimism across markets. You're seeing that with all the industrially inclined precious metals, Savant said. As economic growth picks up, there are hopes that industrial demand for silver and platinum groups the metals will improve, he said. He explained. Meanwhile, investment demand is also showing signs of picking up. He called the metal relatively undervalued compared to gold. And that's true. Silver is the most undervalued it's ever been compared to gold, as the gold to silver ratio is still above 100 to 1, meaning it takes 100 ounces of silver to equal 1 ounce of gold. So you may have some concerns about a second wave of infections and about how long the economic recovery will take. So you've got silver benefiting from both sides, he said, referring to both silver for both positive and negative of this virus outcome. If the virus keeps going on and gets worse and has a second wave, it's going to help silver. And if the virus gets better and the economy picks up, silver is going to win no matter what. It's a win-win situation for silver prices. CPM Group data put total fabrication demand for silver at 926 million ounces in 2019. The largest uses were jewelry and silverware demand 304 million ounces, electronics 230 million ounces, and solar panels 97.4 million ounces. ETF demand for silver had improved 825 million ounces as of the end of April compared to 742 million ounces at the end of 2019. He looks for this to keep rising. But while CPM Group is ultimately bullish on silver, Savant cautioned that prices could give up some of their recent gains in the near term due to profit taking. That's people capitalizing, selling the tops. Further, if a second wave of the virus should cause worse economic damage, the current base scenarios, there could be a sharper retreat. The metal is pretty volatile, and prices have run up quite a bit recently. I think you could see some pullback from the sharp run-up we've seen, but the medium to longer term trend we think is for prices to go up. So, I'll put it this way. Depending on when you're looking to get in or out of silver is highly going to depend upon where you're stacking. If you're looking at silver, if you're not looking to sell for the next, 10, 20 years, then the day-to-day prices are irrelevant unless you're looking to buy right now. If you are looking to sell the tops, I highly recommend just being careful, because the chance of silver in the next 3 to 6 months going up is extremely likely, so you don't want to sell yourself short. So I have another article I'm going to share from dailywealth.com. It's talking about why silver has never been a better deal than it is today. The record stood for 29 years. In 1991, silver was dirt cheap relative to gold. Prices for both metals had fallen over the previous year, but silver's fall was much more dramatic. As a result, gold became extremely expensive compared with its kooky cousin. That value gap peaked in January 29th, 1991. The gold to silver ratio hit its highest level ever, and that record stood until 2020 came along. Now, the 3-decade record has been broken. Gold is more expensive relative to silver than at any time in the past 40 plus years, going back to when gold first started trading freely in the early 70s. Importantly, this value gap won't last forever, and silver is likely to outperform gold in the coming months as a result. Let me explain. Gold is the extrovert at a party. It takes a spotlight at cocktail gatherings. It's a star in the precious metals market most of the time. This isn't a bad thing, but when gold hogs the spotlight, people tend to forget about silver entirely. That's exactly what's happening right now. Investors have driven gold prices through the roof. Meanwhile, silver hasn't seen the same explosive rally. Check it out. So you can see silver and gold, if we're going back from, the beginning of the year, silver's about even at 0%. Gold is up 15%. So silver prices are down 3% this year, while gold prices are up 14%. In recent weeks, we've seen the widest value gap between the metals of all time. Simply put, silver has never been a better deal relative to gold than it is today. The ratio of the two metals broke out to its all-time highs in April. Check it out. And you can see this is when the gold to silver ratio hit above 125 to 1 actually. When this chart is low, silver is expensive. When this chart is high, silver is cheap. You can see the gold has rarely been anywhere near this expensive compared with silver. It has only happened a few times since 1991. And each time it led to massive rallies in silver and major outperformances versus gold. So what that's saying is, if history is going to repeat itself to even a little bit of an extent, silver is going to be massively outperforming gold sooner than later. The first similar instance was when the gold to silver ratio peaked in January 1991. For the next 5+ months, silver outperformed gold. While gold was slightly down from the end of January through June, silver was up 18%. That's an impressive move, but the upside potential can get even better. We saw another example in May 2003. Gold was again getting expensive compared with silver. And if you had bought silver then, you would have crushed gold investors. Sure, gold went to rally 15% from May 2003 to April 2004, but silver rallied 81% over the same period. It was a no contest outperformance. The last time we saw gold's value tower over silver was in November 2008, and you guessed it, once again, buying silver when the gold to silver ratio was high was the right call. Gold rallied a solid 44% from November 2008 to November 2009, but it was no match for silver's 82% gain during that time. Today, gold is the most expensive it has ever been relative to silver, and while it doesn't mean gold prices have to fall, it does mean silver is likely to outperform gold in the coming months. So if you're looking to invest in precious metals, history says silver is the better bet today. Good investing, and that's what we have. So just showing, silver rallied 82% from its 2008 low to the 2011 high. That was when the credit crisis happened, and the same things are happening in today's economy, which is probably going to lead to $50+ silver again. So you want to be on the right side of the fence, right? If history is any type of indicator of higher prices, or if any type of indicator of a correlation from back then, we're going to see $50 silver or maybe even higher because times are more extreme. So I hope you enjoyed both of these articles. The link to these articles will be in the description. I appreciate you guys for sticking along. Hopefully you were able to understand what I was saying most of the video. I'm sorry if I kind of pronounced things differently. Hopefully I'll get the hang of talking a little better. It's going to be a learning curve, but I definitely think I'll be good in the next day or so. So anyways, thanks for tuning in. If you enjoyed this video, make sure to smash the like button. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. Subscribe if you're new. I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.